I know we got cut off a little short on Friday, but it's okay. We're gonna continue off where we were. I just want to see how, I don't know if you traded today. If you did, how was it? Good, to be honest with you. It was a lot of chop, to be honest. So you saved yourself. I completely understand, and that's okay. That's okay. You want to trade with complete ease of mind and complete confirmation. And let me be honest with you, today was just a bunch of noise. It was in scalper paradise. It's all good, man. We're gonna continue off where we where we left off last week. Do you remember exactly what topic we were specifically on? Okay, so more EMA conversations. Okay, perfect. So we're gonna get into it a little bit more today. Then, I want to share my trading view thing here. I don't know if you have the same settings, but I think I can share this. Let me see. Copy link. Let me know what you get if you pop that up there. Two green bars on the top. Kind of like boxes. Interesting. Okay. Is it the Q chart, the QQQ chart that's up there? Oh, check out the QQQ chart for me and see if it comes up differently. Oh, it still has the boxes and stuff. Okay, perfect. It's just you don't see the you don't see the three EMAs on the side. Let me know if it's like maybe shut off. Maybe if you could turn it on. No option for that. Okay, perfect. Hold on. Let me see if I resend the link like this. Would it change anything? Try that new link. I'm so sorry. Same thing? Okay. Uh, well, it's okay. I'll share it to you. It's on view only mode. Let me see if I could change that. Uh, it's all right. Don't worry about it. We're gonna get you on that on the right indicators regardless, okay? So I know you've been using the 34 EMA. I know that EMA has been working. Okay, now you see it? Okay, cool, that's fine. You only see two EMA ribbons? Okay, cool. As long as there's two indicators, that's all we need. Perfect. Nice. But you see all the EMAs, right? The green one, the yellow one, the red one. Okay, perfect, perfect. Okay, nice. So we're there now. Cool. So the way I have it right set up, this is an EMA, basically a confluence of moving averages that I use, and I've been using since honestly the beginning of my technical analysis journey. It's been one of the strongest EMA combinations that you can use. So if you already have separate on a notebook the 34 EMA, and we already went over this lesson, this is a new lesson. This is going to be the 5, the 20, the 50, and the 200 EMA. Okay. It may sound like there's a lot of EMAs there, but it's all good because they all work together like the waters and the waves splash against each other. They work perfectly. So this is how we're gonna go over the example, okay? There's two main things I want you to be able to keep an eye out for. Well, three actually, okay? So the three things I want you to pay attention to are the 5 EMA trend line, right? Support or resistance, right? And quotation marks. And the second thing that I want you to keep an eye out for is EMA convergences, which basically means the 20 EMA crossing above the 50 or the 20 EMA crossing below the 50, right? Etc. Right? And then the third thing, hmm hmm so always watch the 5 EMA for support and resistance. Yep, that's the first thing you're going to want to watch for. Then the second one, convergences, EMA convergences. So for an example, you could put it in parentheses. You could put 20 EMA over the 50, or the 50 or the 20 EMA or below the 50, right? So it depends on the cross, right? If it's crossing over it or if it's crossing below it. You never want to watch the 50 crossing over the 20, because that's basically never how that happens. Remember, the 20 is always the closer moving average, and the 50 is going to be the one that's going to be further away. Okay, cool. So based upon that, the third thing that I want you to keep an eye out on is the 200 EMA. All right. The 200 EMA in parentheses after that, you're going to want to put above or below, right? So if we're above the 200 EMA, price action tends to find bullish momentum, right? If we're below the 200 EMA, price action tends to have a hard time breaking down, like it kind of had today. You know what I mean? So what we want to watch for, the first thing that I want to pay attention to is the 5 EMA, right? So I'm gonna bring this up and I'm gonna actually take out all my other moving averages besides the 5. And what I want you to pay attention to is specifically, I'm gonna show it to you on a day where there's good trend. Like yesterday, for example. Yesterday we had a breakdown. And the moment we had a breakdown, as you can see, let me see, Friday, yeah, Friday, not today. Today was too choppy for the 5 EMA. So I want us to go to Friday, right? The 5 EMA, if you see my chart here, right? I want you to pay attention to how the 5 EMA was acting as support, and then eventually we broke below it, and then we started to actually trade below the EMA. And then eventually we broke above it once more, but did we hold support? Did we close above the EMA? Nope, right? So remember what a breakdown is. A breakdown is if we ever break in between two zones and we stay in that area, right? And we close on the lower end of that zone, price action has a higher probability of doing what? Trading on that zone, right? Into that zone. So what it's gonna do is, since we closed in the lower end of this area, the next candle did the same thing, but this one was more aggressive. So what we're gonna do is we're gonna follow that trend. So the 5 EMA is gonna start acting as a rejection, right? And now look at how it starts to act, right? Ceiling, 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 right? And then boom. Always remember that the furthest point from the price in the EMA is usually where you want to take profit, because that's the extension point. The extension point is usually where you're going to see like a dead cat bounce, or you're going to see basically price snap back a little bit. So whenever you see the price action super far away from the EMA, like sometimes it happens on pumps. You're going to see times where the EMA, I'm gonna have to find another example. Well, for now, let's stick to this one, right? So, for example, right here, right, you see how price action broke down and then the EMA was far away from the candle. Whenever you see that, you want to look at that and be like, all right, cool. So, seeing that the price and the EMA are this far away, price is probably gonna find some support and it's probably gonna bounce back up towards the EMA for a retest. So, what you're gonna want to do is TP, right, before that happens. hmm hmm At the 5 EMA, yeah, yeah. Not a absolutely not a bad idea at all. And as we add the other moving averages in there, you're gonna be able to see how you're gonna be able to kind of like take advantage of little opportunities like that when there's too much chop and you missed out on a move and you want to see another move and you want to take a little bit. All right, cool. Always have the mentality of, stay in for a good time, not a long time. So it's a quick scalp, 5 EMA rejection, boom, take it, and then you leave it. Yep. So that's a good example. hmm Oh, so you said if the price opens up further than the EMA, then it's gonna indicate a reversal. But if it closes, but if it rejects it, it's gonna indicate a continuation. Is that what you're asking? Yeah, 100%. Yeah, currently I'm on Friday's price action. So if you go to Friday, you're gonna see the dump that I'm talking about. Five, the f- yeah. hmm And once you put it in, in the settings, check out the style, and then make sure you have the step line. Perfect. Yes, step line. Third one. Beautiful. Gives you the ladder stair effect. EMA. The only SMA I use is the 50, and that is only to watch the convergence between the 50 and the 20. They're a lot more smoother, right? When you have a smoothing average and an estimated moving average, it's very good to watch the convergences between the two. A lot of people use EMA. To be honest with you, it's subjective. You know what I mean? They both have the same results, honestly. I just tend to see convergences sooner with the smoothing average and the EMA rather than having an EMA with the EMA. You know what I mean? Perfect. You'll see it as you go. It's an experience thing. You little by little, yeah, you'll see it. So yeah, definitely. If you bring up your chart, let me know, and I'll definitely see what you're talking about. hmm You're good, my brother. Take your time. Yeah. Nice. Yep, yep, perfect. There we are. I can see it. Perfect. hmm Yep. They overlapped. Replay mode, right? I feel you. hmm 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 Yes. hmm hmm No, no. Always remember that yeah, yeah. If it opens below that 5 EMA, way better. You know what I mean? Especially if we open above it slightly and then reject. Yeah, like that's just a continuation from the 5. And you know what's interesting? You see how there's space between the 5 EMA and the candle? Yeah. hmm Yeah. Mhm. 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 Mhm, that's perfectly fine. It's the next candle after it, right? So you always want to make sure that the 5 EMA can move with the candles. If the 5 EMA cannot move with the candles and one candle is further away than the EMA, that's called like an overextension of momentum. And that's like an imbalance, so to speak. And sometimes those imbalances are met with snapbacks, retests. So that's why you get those reversals. Perfect. It's a great example. Nice, Gamer J. Perfect. No, that was good, man. I like that. Good question, man. If you got anything else like that, bro, keep shooting them. That's perfect. So yeah, like when you see stuff like that, boom, rejection, breakdown, continuation. The only time you want to kind of like shine away from the five is when you see this, right? That's very clear. Indicate exactly, child. We don't even want to touch that. That's when the other EMAs come into play. So what I'm gonna do now is add the 20, and we're gonna see how how that one's been working. So the 20 should show up here. Where are we? Where's that 20 EMA? It's being sneaky. Give me 1 second here. Yeah, I might have to do that. Let me see where I could do that. Because I'm on the TradingView actual app. How do you refresh the actual? Yeah, I'm on the yeah, I usually use the desktop. Like if you're on desktop right now, you just download the app into your desktop. It's way better. You know what I mean? Because it's like you don't have to deal with whatever page pop-ups or bullshit. You never know. You know what I mean? Sometimes, yeah. So to me, it's personally, it's just more cleaner, better, and stuff like that. But hold on, let me see here real quick. So sorry about this. Yeah. Uh, might have to use DCMAs instead. It's cool, fine. I wouldn't have to worry about that. Let's see. Okay, that's cool. We'll just have to work with these, okay? And I'll try to not make it too like overcrowded, right? Just so we could have a good idea. Okay, perfect. So we're gonna go back to Friday where we were. All right. And we're gonna look at that 5 minute where we were before as well. Right. So this is where that 20 EMA comes into play. So you see how the 5 EMA was acting as a rejection point, right? And then boom, we bumped up. If the 5 EMA was the only thing we were depending on, we wouldn't see the 20 EMA rejection right here. You know what I mean? So that's why it's very important to also have those other confluences in place. The 20 EMA to me is the strongest moving average because it tells you immediate trend. Immediate trend is something like this. If pre-market we had a strong support above the 20 EMA, the moment we broke out, every single time we went above it, we were just riding that trend, right? And the moment we flipped up and then came back down below the 20 EMA, remember what we learned about in the beginning of our mentorship? Every single time there's a breakdown, a break of structure, what happens? Retest, right? So the retest always lines up with the previous support zone. But sometimes you're gonna have these confluences where not only does it line up with the previous support zone, but it also lines up with an EMA. And what does that do? It makes the zone stronger. You know what I'm saying? It makes the zone stronger and it makes us have more conviction in what we're seeing. So what you're gonna do is if you replay mode this, you're gonna wait for this candle to close, right? You're gonna see this first candle close, you're gonna wait for this candle to close, right? And what you're gonna do first and second. Remember how we always do it: 1, 2, 3 candle pullbacks, or 1, 2 exactly, or 1, 2, 3 candle continuations, right? So first candle said rejection, second candle said we're gonna dump, and then the third candle said let's continue the dump. So what we're gonna do is we're gonna enter on the confirmation of the previous candle, which was the rejection. The confirmation of a rejection is what? A red candle or a lower low, right? Which we got here. In this moment, we got the lower low and the rejection, so we're going to enter puts on that, and we have a stop loss above what? These highs right here, right? So stop loss above those highs, and then we're looking for an area for a breakdown below the zone, right? So stop loss, and we're looking for this breakdown for not much of a take profit, but more of a trend continuation, because we understand that this is just a retest. This is just the beginning of a trend, so there's no point to just TP here. So you watch for the rejection, and then you want to watch how the EMA acts as a ceiling. That's very important, right? Always remember that the 20 EMA and the 5 EMA work together to show you one thing, and that's trend, right? So you saw how the 5 EMA, when we broke down, we had like a distance from the 5 EMA that we saw at first. And that distance told us that we were probably going to get a reversal back up because the price was too far from the EMA. Once we saw that, the reversal back up from that EMA put us right back into that 5 EMA. And now we're close to it again, like you see here, right? And now we're rejecting it, right? One thing that I want you to notice is how price is getting away from the 20 EMA, right? So this is a big difference between the 5 EMA having distance from the price and the 20 EMA having distance from the price. When the 20 EMA and the price have distance, that shows strength and momentum on a possible continuation dump, meaning the further we are from the EMA, the stronger the dump is going to be at hand. Meaning the more volume is going to kick in, the more momentum is going to kick in. There's really no telling how far down it can go when there's that sort of distance, right? So that's what that means. The moment you see a strong wick up of support, that's the moment you're thinking to your head, okay, now they're gonna want to have the 20 EMA catch up. Because remember, if the momentum of the price over outperforms the EMA has to play catch up, right? And the only way the EMA can play catch up is if there's eventually a reversal, right, for a retest. And that's when those retests, exactly, and that's when those retests happen. EMA usually treads lower, and then eventually we see if we reject or if we push out of the EMA. And by that point, you're already far gone out of puts. You know what I mean? So seeing that rejection, yeah, how do you feel? Talk to me. Mhm. Yes, sir. My entry would be the next candle from this blue box rejection, and my stop loss would be up here. So if I were to project this, it would be something like this. So right, you could literally enter on the third candle, right? So once this second candle closes, just to be conservative, obviously, because you don't want to and get in on chop, you could get in on that third candle, and then you could have a stop loss comfortably right here or up here if you want to give yourself some space. You know what I mean? So you could either choose a stop loss here or a stop loss here. But at the end of the day, your take profit is going to be on the break of structure. So you're going to target the lows of pre-market, right? So that's essentially how far you're going to take it down. So this is where you're going to be like, okay, if it gets into the zone or if it chops too much here, I'm probably going to try to get out. But the commitment to the downside from these highs, that's your entry. Okay. So the moment you see yeah, what's up? Right here. The commitment to the downside would be this candle, right? And that's where you enter. So you get in on which one? This one right here? Or the close of the third candle? Okay. Yeah, yeah, yeah. Fourth, sometimes you want to be careful with that because momentum usually rides. Yeah, yeah. Now you see it, right? Momentum usually rides on the second and third candle, right? If you want to have a aggressive entry, the second candle could be a good entry to look at, but you need to have an aggressive stop loss, meaning you cannot allow the price to get too overextended over the previous high for you to get out of the trade, right? Or you could wait for that conservative third candle, right? Once that third candle breaks down below the previous low of the candle, I wish I could show you this live because this would be a lot more better. Um, this example right here, once when this candle opened up and it broke down, do you see this previous wick right here? Right there. I would have probably got in. Hmm. Okay. 100%. I understand that. You know what I would suggest for you since you're doing options more on futures, this is the perfect entry because you can control this. You know what I mean? A lot more. But on options, if I were you, I would get in somewhere around here. So on the close of this candle, once this candle closed and the next candle started to show that breakdown, don't even wait for it to show for it to break down below the low. Just kind of get in on the weakness and watch the 20 EMA act as a ceiling. So as the 20 acts as a ceiling, make the second candle close, or yeah, make the second candle close your open, to be honest with you. It's the best way to go about it. Make the second candle close your open. Don't even wait for the third. Don't even wait for the fourth, because at that point, those are going to be the momentum candles that you won't be able to get the right fill, right? The second candle is going to be your confirmation candle. All you got to do is respect your stop losses, right? And then you'll be good, Gamer J. You're going to be good. Beautiful. All right. So we're going to add, uh, yeah, respect them. Always have to, man. Because if you don't, it's gonna pinch you. Yes, sir. So let's see how this goes. Right now, we had a break of structure. Right, price came down to these lows. We're probably gonna pick up from this little area right here. Perfect. Right. So we know there's always gonna be a retest. Right. So that's why price came back up, and then price is always gonna come back down for that new break of structure. Right. And look at that 20 EMA. What's it been doing this whole time? Exactly. Staying away, right? Like COVID, right? 6 feet. Exactly, brother. That's what you want to see. You want to make sure that the 20 is allergic to the price. As long as the 20 is allergic to the price, we're good. But the moment they start to get, a little friendly, they start to become a little nice, that's when you start to, see a bottom, to be honest, brother. Look at this. Essentially, you're going to start to see rejection. Rejection is good, right? But then rejection with commitment, that's what you want to see. If you don't get a commitment, then what's the point, right? But right now we're seeing rejection, rejection, the 20 EMAs being respected, and then boom, what happened here? Right? You could They're chopping, right? You can see they tried to bring it back up, but nothing. So back down to the area where we had right here, these lows, 663.32. Until we what? We broke down below the lows, and then there's the distance again, right? So now you're gonna see what it really looks when the price reverses back out. Do you see all this chop that we have over here? What's the first thing you want to see from this chop? Mm-hmm. You want to see support above the top of the range of that chop. Yeah, perfect. Oh, exactly. Exactly. If we're gonna go long, we're gonna wait on the top of this range to turn into support. If we're gonna go short, the bottom of the range to break, right? Always remember those little tiny things because it keeps you away from chop, to be honest with you. You're not gonna trade if you see that, right? So for right now, chop, chop, chop right here, obviously on the breakdown below 662.64, went all the way down to 661.38. That's a dollar move down. But this is all right last night, and then overnight essentially we had the chop. So what I really want you to see is how that EMA has been respected and then essentially disrespected and how it treats itself, right? Also, always remember, Gamer J, you could connect different confluences to this, right? Like if you have a bearish FEG, you connect it to the 20 EMA, and then boom, now you got a confluence, right? Exactly. And then the 20, exactly. Beautiful. Exactly. And then boom, you see how price action is starting to, it looks a little bit like a falling wedge, right? You kind of draw your little wedge out. And then now what are we looking for? We're looking for support above what? All this bullshit right here, right? Exactly. And look at that 20 EMA. What's it doing? Exactly. How many candles did we keep away from that 20? A couple, right? Look at that. That's space. That's good. Look at that 5 EMA acting as a staircase to heaven, right? But eventually, we got to retest, right? Retests always have to happen at some point. You know what I mean? And that's okay. Depending on the strength of the retest, that is going to determine what we do, right? If the retest is, Mhm. Oh, right here. Yup, that is true. That is definitely true. Mhm. 100%. And that's it. Get out. You know what I mean? And then at that moment, you see that 5 EMA, that snap back to reality. Now you're feeling good. You're like, Jesus Christ, I got out perfectly, you know? And then from there, you let it move. And then you just watch that 20 EMA. I want to see how price action started to react on that pump back up. Okay, cool. You see the breach, right? And then after the breach, what do you see? You see the 5 EMA crossing above the 20. You see how when the 5 crosses above the 20, it starts to show trend commitment, right? Because guess what? Always remember the 5 EMA is the closest moving average to the price. So if the 5 EMA is going to be above the 20, you have support. And that's going to be the 5, right? Staircase to heaven. Think about that always, right? So right here, we're going to see that push out, 5 EMA breakout, and then boom, support, right? You're not seeing that distance like before, right, Gamer J? But then this time around, we get a little bit of distance. Always remember that distance is no good. You see those gaps? They're like imbalances, you know? Price action is always gonna come back, snap back to reality a bit, and then eventually it'll come back up from there, you know? But it's always good to remember these little things. So how do you feel about that 20 EMA so far? Pretty chill, right? Nice, nice. Now we're gonna add that 50 SMA. We're gonna see what's going on with that 50 SMA. But doing a whole lot of TA on the way too here. Just can't help myself. Give me 1 second here. Yeah, man. I see a wedge. I gotta draw it. All right, let's see. Okay, cool. So we're gonna come back to where we were at before, and we're going to add that 20. I mean that 50. Oh, wrong one. All right, let's see. 50. Perfect. Let's take that out. All right, there's that 50 SMA now. Now I want you to tell me one thing that stands out to you like a sore thumb immediately as soon as I put that on. That's it. Oh yeah, that's good too. Mm-hmm. Yep. 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 That's perfect. I love that, Gamer J. You broke it down exactly how I wanted you to break it down. The convergence, the distance, right? It's more extensive than the one that you see from the 20 EMA, right? And then seeing the distance from the 20 EMA and the 50 SMA, what does it show you that we have so much space between the EMAs? It's strong. Shows you that we're not gonna have to deal with anything weird until eventually these come back together. So always remember, convergences equal what? Reversals, weakness, right? So if the 20 EMA comes near the 50, expect that reversal to happen. If the 50 EMA is far away from the 20, expect that to be distance, that space, that strength, right? So if we were to watch this trend again, right? And we were to watch just the 20 and the 50 SMA on the possible continuation here. Let's see. Look at that. You see how they don't lie to you? Even though the price went up, did the 20 go above the 50? Nope. That's why I like to use these two. They don't lie. You know what I mean? And once that breakdown happened, right? The FEG, bearish FEG that we marked out before, 20 EMA rejection, and it's below the 50. Good looking good here, Gamer J. Let's take some shorts. You know what I'm saying? And then guess what? Your stop loss is going to be above the what? The 50 SMA. Now you have even more conviction. You know what I mean? Instead of saying, "Oh, I'm gonna just put it above the wick," now you can say, "Oh, I'm gonna put it above the 50 SMA." Right? So it's even stronger, and now it makes more sense, and now you have even more conviction on that zone. And then boom, breakdown happens, and you get to trade that breakdown, right? So that's the most beautiful thing about that, right? And you're gonna see what a true convergence looks like. Real quick here. So let me see what happens here, right? So boom, there we go. Okay, perfect. You want to see something interesting here, Gamer J? Do you see how we pumped up here, but the price never crossed until we came back down for the retest? So now I want you to notice how the cross reacts with the retest. Interesting, right? Interesting how we broke down. Hold on. Sorry about that. Interesting how we broke down below the 20 EMA, but what happened with that 50 SMA? What was that 50 SMA doing? It was acting as support. It was literally keeping the price up, and it was like a little hand, you know what I mean? Just there. Hey, I'm here. Don't worry. You're not gonna fall, right? And then I want you to notice one thing too. The 20 and the 50 SMA, are they pointing down or are they pointing up? Right? So if I take one candle away, let's see how that looks, right? Stagnant. And the 20 is up, right? If I take one more candle away, let's see how that looks, right? This does not look bearish to me. You know what I'm saying? For this to be bearish, I need it to go down, you know? Hmm. Exactly. So it's all about patience, waiting, right? And then guess what? Look to the left, right? Where is their support? There's support right here, right? Previous highs, right? And then you act that support on that zone. Always remember, it doesn't have to be picture perfect game energy like how we went over the first time, right? Things could be a little bit, out of like line. It doesn't have to be like, oh, perfect on that zone. You know what I mean? Highs, it's always a zone, not a level, right? So if you look at things as zones, you're not gonna focus too much on that little area and be like, oh, but the wick here, oh, but this area. No, just too much more about where the price closed, right? So if you can see one thing in common with all these prices, right? This candle closed here, this candle closed here, it wicked up. These candles closed a little bit higher, but that was a rejection of this high. And then this one had a rejection at the same high as these closes. And now that's acting as support over here. So it's about cluster. Wherever you see a lot of action, wherever you see a lot of liquidity, that's where you want to kind of like mark out that zone. Hmm. And there's a big wig. I love that. Thank you, brother. It's actually very good. So boom, even more strength, you know? So now you're feeling very good about this zone. So it makes sense that we bounce out of here, right, Gamer J? Now you're looking at this and you don't feel like confused about the pump. You know what I mean? We went over it. You know what I mean? We didn't include any data, no news, nothing. Just looked at what made sense. And obviously, remember the news is the fuel, right? Whatever data dropped caused this to happen like this. But at the end, we knew something like this was gonna happen, right? Perfect. Exactly. Exactly. Because sometimes there's those moments where you can definitely be a little aggressive if you have the proper risk management. It's all it comes down to. Rejection hits. Remember the space between the 5 and the price, and then look how the price action comes back down to the EMAs here, right? Look at that. What happened to that 20 EMA, right? We had support, we bounced up, but then what happened with the 5? Can we close above the 5? Not really. We ever had a hard time there, right? So what does that tell you about the possible rejection back into the 20 EMA? That tells you that we're probably going to break below the 20 and then go where? Exactly. Or at least try to retest it. Exactly. So let's see if we do that. We attempt a retest, and this is the closest we got, right? Remember, sometimes price is going to come down to it, but sometimes it's not. And if it doesn't, then what does that tell you about the price? It tells you everything you need to know. Exactly. It's not weak enough to go down to the 5 EMA. It's too strong. Buyers are stepping in too earlier than where they're supposed to. So that just tells you, okay, so I'm just gonna commit to the upside on the break of structure, right? And then boom, break of structure happens, and then that's how you are able to make some money, right? Like I would have entered, honestly, I would have entered right here, right? Because once the break of structure happens, remember I always tell you, you don't want to be the guy that gets in on the pump that happens already. You want to be the guy that gets in on the retest of the pump, right? So you're either going to be this guy, right? Or you're going to be this guy, right? Both of these guys can win. It's just one of them has a better entry, you know? Yeah, so it really just comes down to whenever I try to like imagine a trend, right? If we break structure above a previous zone, I want to see how much price extends to a certain high before it finds a rejection. And then I patiently wait for that retest that I know comes with that rejection, you know? So I just really sit back, let whatever happens, happens. And then after that, I patiently watch the retest. Sometimes, depending on the strength of the retest, I scalp. You know what I mean? I'll take my little short, I'll take a scalp to the 20. You know what I mean? Like from here, like you know how we're too far from the 20? If we break down to the 20 again, 668 to 667.46 on futures is a great push down. I'll take that. You know what I mean? Little situations like that, right? On weakness, right? But then there's other areas where, you know what I mean? The weakness happens, the pullback happens, and then there's an even bigger dump, right? That's why it's very good to just be patient. Just wait on it. You know what I mean? Let the retest happen. Let it commit to you. If you see a pump, don't FOMO into it. Scalping's a different thing, but always have a goal. Like, you know, if people we're gonna get into calls at open, right? The only way I would get into calls at open would be above 668, 669 support for a push to 670, right? And that makes sense. You know what I mean? It makes sense because we hit 670 on March 13th, Friday the 13th, right? That was a rejection high that we had. And we also have this breakdown support of 668. We marked all of this out already. So look how it's acting now, you know? So it's very interesting to see that. But if that doesn't happen, what are we doing? We're taking shorts back down. So let's see what happens here, right? We opened up. Look at that. 20. Look at that 20 EMA, right? Look at that. Right there. Right. So right here, I would have definitely asked you, all right, cool. So judging based upon this, right? What kind of trend are we in? Exactly. So what's gonna happen with this pump up right here? It's gonna be a break of structure, right? Exactly. That's simple, right? Exactly. Remember, change of character would have been if we took out what low? Exactly. Yes. Mm-hmm. Beautiful. Nice, nice. And just, obviously it didn't happen, but just for clarification, right? If we had a change of character, what would have happened to that 50 SMA and that 20 eventually on that change of character? Yes. Beautiful. Exactly. And eventually the convergence and eventually the continuation. Beautiful. Nice gamer J. So in this very moment, we had the pump up, you know what I mean, all the way to these highs and eventually the rejection, right? And look where it came back down to. Came right back down to the zone where we started, right? And then these are things where you want to notice. Sometimes price will break down below the 50 SMA, but always remember the next candle has to reject the 50 SMA, right, Gamer J? In order for us to continue down from it, right? If the next candle opens up and breaks above the 50 SMA, what does that mean? That means we're not going to respect the downside, right? And we're probably gonna reverse back out. Yeah, mhm. Oh, where we crossed the 50, to the bottom or to the top? Oh, so this one right here? Perfect. Mhm. So in this situation, the first candle that for the breakdown on the rejection or for the reversal? Yes. Mhm. Yes. Uh-huh. Yes. Mhm. Exactly. Yeah, you caught yourself there a little bit, right? Because remember, if we're on the downtrend, right, there's going to be, some sort of a retest, exactly. And that's where you want to short, right? Because if you're getting in right here, you're getting in on what support, the previous support that we had. There's a reason why the price wicked here, right? Always remember if something happens at an area, there's a reason behind it and you're trading against it, you know? So just catch yourself not trading against the reasons. that you see. Instead, formulate, be fluid with it, and then follow through with it, right? Sometimes you might get more than you bargained for. Let's say you get into a scalp for a retest on longs, and then boom, this happens. you know, you're gonna be happy. You're gonna be like, oh shit, man, my stops are a profit. I'm in a risk-free trade. I'm great. Everything's good. You know what I mean? Got more than what I bargained for. And if eventually your stops and profit hits, and then you see a rejection, you were already thinking about a retest for a dump. So there you go. You know what I mean? So it kind of puts everything together for you. You know what I mean? But it's all about being patient. Don't be the first guy, right? Don't be the first guy. Be the second guy, right? The guy that gets in on the retest. Perfect. Perfect. So right here, you can see how the 50 SMA, we broke right back above it, came down for a retest, closed above it, and then boom. And then right here, look how interesting that was, that little cross that we had right there, right? Once we had that cross, what happened with that cross, right? That cross had a FEG, bearish FEG, right? So it's another reason to possibly want to enter shorts, right? And then that's the retest. Beautiful, right? Like Gamer J, you were not going to get in down here, right? You're going to get in up here. Exactly. Beautiful. Nice. And even better when you have something like this showing, all the strength. You got a cross, you got a 50 SMA rejection, you got a 5 EMA close, you got the FEG. No wonder we broke down so hard, right? Perfect. Yeah, hell yeah, hell yeah. And always remember, the thing about confluence trading is there's so many retail traders and institutional traders that use a lot of methods that we actively portray in our decision making. And when you apply EMA confluences with breaker structure, market structure confluences, and then you add the RSI divergence in there, you have to understand that you're trading with people that trade EMAs, you're trading with people that are trading RSI divergence. All those different traders are coming together and seeing the same thing. That's liquidity, right? And liquidity is what you want and what you need for you to be able to make the money that you want out of these trades, right? 9 times out of 10, anchored VWAPs and RSI divergence, just so you know, that's a CMT level thing right there, right? So certified market technicians know this, right? Not plenty of people that get into charting just know what an RSI divergence is because it's a concept that takes a lot of studying and it takes years of watching the charts, you know what I mean? And here we are talking about it and breaking it down in a day, you know? So that's a cool thing about it. It's an easy concept that once you formulate and you understand it, you're gonna literally trade with all these different traders at the same time. And you're gonna see everything they're seeing in one shot. Perfect. Perfect. And that's the whole point of them piling on, right? So I want you to know that these EMAs that I got here, you can use them honestly on any time frame because that's really what it comes down to, right? You want to make sure, there we go, finally this one works. You want to make sure that you want to make sure that you can use all EMAs. Honestly, now I want to add the 200 since we were already on this example. Let me add the 200 EMA here. And let's go back to where we were. We were over here, right? So I'm gonna add the 200 EMA, and we're just gonna give it a quick peek just so you can see how it all falls in together, right? So let's add that in there. Boom, 200 EMA. Look at that 200 EMA, right? So we were above it. The moment we broke down below the 200 EMA was when? The moment we crossed the 20 and the 50. Don't you see that beautiful, beautiful confluence right there? You have that 200 EMA breaking down. You have the 20 and the 50 crossing, and then you have the 20 EMA rejection, as well as the bearish FEG that we have actually right here. I didn't even notice that at first. But when you notice these little things, it makes it so much more better, man. And then boom, more reason for me to get into a short on the next candle, right? So I short on this candle or the third candle, like how, whichever one. In your case, since you're doing options, this second candle right here, and then that third candle breaking down below the 200 EMA gives you more reason to stay in. Now, I want you to know, whenever price does break down below the 200 EMA, that's why you get these extensive moves, right? It equals long-term dump, right? Always remember that the 200 EMA is the long-term trend. So if the long-term trend breaks, what does that mean, right? Yes, sir. If the midterm trend breaks, what does that mean for the midterm? We're gonna have a short, yeah, midterm dump. Same thing with the short term, right? So that's why you have to always add these in together, right? the 200 EMA, I put a lot of I guess weight on that level. Just yeah, exactly. A lot of weight on that level just because of its significance. So once you see the price action, right? Let's say for example, pre-market, right? If you're just looking at the 200 EMA, all this is noise until when? Until we broke above the 200. Yup, right here. And then once we cross above the 200 EMA, boom, look at that shoot up. And look how strong that was, right? Exactly. That's also something very important that I wanted you to look at too. So the same way we look at the 20 crossing above the 50 and below the 50 is the same way you can also look at the 20 crossing and above the 200 and below the 200. So that's a very, very good confluence that you can add, Gamer J, right? So you see how we came up? Yeah, this looks good. Nice. I like it. Cool. But did the 20 cross? Nope. So the second the 20 cross, which was over here, that shows true trend shift, right? We could trust that. You know what I mean? This is something you can trust rather than this, right? So this versus this, now you know what a real pump looks like, right? Based on the 20 crossing above the 50. So, mhm, 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 mhm. Nice. Mhm, mhm, mhm. Yes. So you see why I waited for that extra candle below the 200 and then that breakdown on the continuation. Mhm. Exactly. Mhm. 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 More liquidity grabbed, you know what I mean? So anybody that piled into this high to get into longs, so they could get so they could get the 670 breakout, they were faked out because instead of looking at the retest, they were like, "Oh, this is the reversal. We're gonna go all the way back up to 672." You know what I mean? But since you and I, we know what a bearish trend looks like because of the sweep that we had right now below 668, that tells us that all we're doing is retesting that zone to grab liquidity and continue back down. So it's not, we can't just retest the 50 and continue down because guess what? Not much liquidity is being grabbed. And that also incites a strong bearish trend immediately without any retests. So it's very good to see this. This is how they grab liquidity. hmm Perfect. Yeah. Perfect. 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 And then you just have a strict stop. You know what I mean? If it does come back above this area, the 20 EMA where the strong rejection was, then you have to, obviously get out of your put. And also keep in mind, a lot of people usually take the small loss and then they're like, oh, that sucks. But if this is a small area where you take the loss and then price out of nowhere commits from here to here, are you just gonna miss out on this whole run? You know what I mean? You shouldn't, you know what I mean? Because I always like Mirage and like we always talk about in the group sometimes, right? If you have a setup that doesn't play out, then it's set up for the opposite end and it's going to be strong. So formulate, be liquid, you know what I mean? You got to be able to move into one place and immediately be able to shift into the other. That's not revenge trading, but that's because that's trading with narrative, right? If your stop loss is at a zone of invalidation and then your stop loss hits and your invalidation point is a validation for the opposite end of trading, what are you gonna yeah, you can't just sit there and let the money, print without you. You got to get your money back. And that's how you do it, the proper way, right? So retest 200 EMA, right? You could get him right here, and then boom, that breakdown for the breaker structure continues, and then that's how eventually you make your money, right? So the thing about the 20 and the 50 and the 200 that I wanted to also show you is if you ever gamer J want to get into like just higher time frame analysis, man, this is a very strong indication that you could use. The same way I told you about the 34 EMA on the daily, you could also use this on the daily as well, right? So let's go look at this on the daily. So every single time SPY has been bullish, or Qs in this case has been bullish, the 20 EMA has acted as a strong support zone. Look at this, right? Boom, 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 right? Anytime we went below it, what was there to save it? The 50, right? So that 50 is exactly. So that 50, and now you see that, right? So the 200 EMA, right? We know that zone as a strong support zone because guess what? The last time that we were around the 200 EMA was over here, right? Look at that. Strong support, right? And then that strong support committed to the upside. It's not like this support over here, right? This support, it bounced for a little bit, but then what happened? It came back down, right? So that's not good. This is a lot more better. Obviously, we had a gap up. So what you want to usually do is wait to see if the gap's going to fill, right? So I'm going to put a line on the top of the gap. If my line never touches, then we're going to get a gap fill. If my line never touches, then you know what I'm going to do? I'm going to put a line on the high and I'm going to trade that high, right? So this is why I tell people sometimes people they see gaps and they're like, "Oh, but the gap is there, man. How can I trade it if the gap is there, you know?" And then boom, they end up mhm. This should look a little different just because it's on cues, but I'm pretty sure we have another one down here too. Think- mhm. 419, 490. Oh, 490. Sorry about that. So this area right here. So this is why I was gonna mark it out the way I marked it out. So it depends on how we're looking at it, right? If this breaches the top of the gap, then it's gonna come down to this area, right? Which in this case we're gonna trade this zone. You know what I mean? Which is this gap right here, right? So this is the gap. But what I'm also like taking into account is if the gap doesn't fill, you have to have a backup plan. And what's the backup plan? The previous highs being taken out, right? If the previous highs get taken out and turned into support, like they did right here, you're gonna trade that trend instead of the gap fill. You know what I mean? So a lot of people usually see gaps and they're like, no, I can't trade the trend to the upside because the gap is an imbalance and that needs to fill. And this is a retail trap. A lot of people usually see that and then they sit back and just let the market go without them. That's why a lot of people couldn't really commit to this until when? Around here or around here. And guess what? This has all been a liquidity trap for retail. Once retail started to get in, that's when they started to, do this bullshit, right? All this was institutional traders, right? Institutional traders can sell out whenever they want, especially from here. Whoever bought in here, you know what's funny about this? This is where the real banks started to buy. Like the banks, all Trump's friends, Schwab, all those losers, man. Yeah, this is where they bought. Right? And the thing about these guys is whenever the market really hits the hay, or or when that day ever comes, exactly, they're gonna be the ones to sell. And guess what? They have the best entry. You know what I mean? And when they sell, they're gonna fuck all these people up, right? And then that's what eventually brings us here, right? Exactly. So that's how accumulation, manipulation, and distribution happens, right? It's a fun little phase, but it's AMD, right? I like that one. That's a lot better. I'm gonna have to steal that one from you, man. But yeah, you see my point here, right? It all comes down to being able to watch the trend right now. If we had our EMAs in here, right? You can see the 20 EMA, the 200 EMA, sorry, acted as a support, and then from there we broke out. And I would personally go long on the market on the first 20 EMA retest. So right there, I would have went long term, man. Not gonna lie, bro. If I was paying attention to this during June, I would have done it. I missed it. It's okay. We'll catch the next one, you know? The cool thing about this is you see how this is breaking down? The last time we had something like that was over here, right? So we have something to relate that dump to. That's the coolest thing about all this. We're never going to be in an area where, oh, we have no idea what's going to happen if the 20 breaks below the 50. Well, we know because this happened before. The last time the 20 broke below the 50, look how extensive the dump was, right? But what's the difference between this dump that we had, Gamer J, compared to this dump right now? Yeah, and then there's no space, right? Look at the space. There's huge space. The 20 and the 50 EMA are completely rejecting each other. They don't want nothing to do with each other, right? One is over there, the other one's down here, right? And then eventually we found a bottom, and that's when the 20 EMA crossed the 50, right? But if you look at this dump, the 20 and the 50 are very close to each other. And what's crazier about this is we're closer to the 200 EMA than we were before on the dump. So this, in a lot of retrospect, can turn into a very this could turn into a very ugly picture, right? Because if we lose the 200 EMA, right, the couple times that we've done it, we've dumped down pretty strong. Like we could literally bring this back, and I'm gonna show you something crazy, right? So if I grab this box right below the 200 EMA, right, from the low to the high, and I put it around here, look where it puts us, 501, right? So I want you to notice something else here. If you grab this box and you put it over here, isn't it almost equal? Now, if I grab this box, right, and I put it somewhere, hold on, you're gonna have to see the big major dumps in the market. There we go, somewhere over here. There we go. Look at this right here, equal, right? So you're gonna notice that a lot of the markets usually have very controlled 10% pullbacks. That's what a market correction is always gonna be, right? So a 10% market correction from where we are right now, below the 200 EMA will leave us at around 501. So now you know how people get levels like that. You know, they just calculate the previous dumps, calculate it with dumps that we've had in the past 10 years that look like that, and then bring it down to averages and statistically see if we're in for another dump like that, right? And yes, so this is very important to see, right? 200 EMA for now. That's going to be our saving grace, Gamer J. But the day we break down below 587, the market is going to flush. And you know what's so cool about 587, Gamer J? Does it not line up with the previous low that we had right there? Exactly. So what do we get? What happens when we take out that low, Gamer J, in terms of market structure? What is that called? Yes, sir. Change of character. And the moment we get that change of character, we're gonna dump down to probably one of these areas, maybe this high right here, possibly. And the moment that happens, what are we gonna do? Retest, right? Exactly. And that's usually how market crashes happen, right? As you can see, we had a huge retest over here before we had the continuation, right? So it's always good to keep an eye on this. We obviously don't know how low it can go. That all depends on where it wants to find support. It could be either here, or all the way down here. We already have areas in mind to watch. So that's a cool part about it, you know? But all we're going to do is follow the change of character, trade the change of character, obviously on the momentum break, because this is a daily chart. A change of character is going to be a whole day worth of dump, Gamer J. You know what I mean? So that's going to be a easy day to trade, right? Like for example, today's SPY closed below 669, sorry, 670, right? To me, that's bearish. If SPY continues below 670 tomorrow, Gamer J, I'm already gonna get into puts. Like I'm not even gonna think about it twice, because I know we're probably gonna come back down to fill the what 663 gap that we left open overnight, which is all the way down here. This big shit right there. And then look at the 1 hour. Look, the 5 EMA is starting to reject. We rejected the 200 EMA, and then look at that 20 and that 50. They were about to cross, but it's not looking like it's gonna happen. So it's little things like that. Mhm. If the 20 crosses the 50, you're eventually supposed to see support off the 50 or the 20 for a rebound. So it's supposed to act as a support zone. I've seen that. No, that's good. That's good because that's how I was too, bro. I was like that in school all the time. I would literally tell my teacher to forget it because I already answered myself. Yeah. Yeah. Yes, sir. Oh, that's this week. Jesus Christ. And we have FOMC on Wednesday. Oh, excuse me. The what? Oh, the OPEX level on I actually don't know the levels for OPEX for SPY. Oh, 63. Yeah, on SPY, right? Mhm. Wow. Wow, wow, wow. See, that's interesting. That's very interesting. Huh. Hmm. But yeah, if you could share your screen, that'd be cool. Or screenshot, whatever's best for you. My boy Gamer J mixing it with the quant, yo. I hope you know it's gonna make you such a powerful trader, man. I love that. Like if you mix technical analysis with quant, good. Yeah, you do. You really do. PTSD. I know, man. I can see your quant data screen. Yes, sir. I'm seeing your gex, your dex, your interval maps, your net delta. Beautiful. Yeah. Jesus. Yes. Hmm. Damn. That looks insane. No, literally. Yeah. That's insane. It is aligning. That's beautiful. Mm. Wow. It's not bad, bro. You're seeing confluences. Yeah, you're seeing confluences. TA, the data is saying it. You know what's funny? At the end of the day, you always have to remember, Gamer J, the world. I've started to realize this, bro. I could sound crazy to you right now, but bro, it's insane. The world is literally a chessboard. Like I feel like every single event is already premeditated. You know what I mean? In terms of how the market is going to react to it. I swear. Yup. I swear. Ex- l- Crazy stuff. Yup. Everything's already written. You know what I'm saying? That's the crazy part about it. Like the VIX, right? It was at like 20s for a little bit, and I was telling Jackson and Swing and everybody in the chat, I'm like, this the VIX is gonna go to 35 soon, guys. Be careful, right? Because I'm seeing a couple bullish divergences. Highs are being taken out. We're getting comfortable above 1820. And everybody was like, all right, gosh, thanks, Shauna. I'm gonna pick up some hedges. A couple people picked up puts, and then what happened a couple days ago? We went all the way to I think 660, right? And then the VIX went all the way to I think 34, 33. You know what I mean? And then the war happened. You know what I mean? I didn't know the war was gonna happen. I just said be careful with the VIX. And then boom. It's crazy. Hell no. Hell no, bro. And it's crazy because you see it more because on Poly Market, people openly bet. Like there were people betting on Iran getting struck. Somebody made money on that. You know what I mean? Like, it's crazy. Hmm. But yeah, brother, we tuned in, man. How do you feel about everything we went over today? How do you feel about the confluences, the EMAs? How do you feel about this bunch specifically? Nice, nice. Yeah, hell yeah. Let's do it. Hmm. Currently, I'm frozen on quant data right now. Yeah, no, you're good. Don't worry. Yes, sir. Okay, okay, got it. You could do aqua blue like I do. Oh, you're 20. Yeah, yeah. Now don't get confused. Yes, get something nice and dark. Maybe yellow. You think yellow's good for you? How do you see it? Nice. Fire. Mhm. Oh, check the weekly chart. Hmm. And you got a bullish divergence too. Nice. Okay. Hmm. Hmm. Yes. Yes, that's excellent sentiment. Aside of the fact that they're also basing consolidation at a higher low as well, right? Remember, the RSI made a lower low just for the price to be able to make room for a pump up towards that 450 and 460 zone, right? 470. So at this moment, what you really want to pay attention to is that 200 EMA consolidative zone on that 402.89 breakout, that 5 EMA breakout. And then from there, you're going to see those highs, up all the way up to that 20. Yeah. Perfect. And some could even debate that this is a falling wedge. You know what I mean? I would say it is. Hmm. Yes, sir. Yep. Hmm. The thing, yeah, yeah. I was just about to say the RSI reset. Always remember if the formation's playing out and the RSI oversells or overbuys based on that formation, you could basically call it even at that point. You know what I mean? If you have an inverse head and shoulder and boom, the RSI goes all the way to 85 because of the inverse, we would basically say it played out. You know? Nice. So yeah, that definitely played out. You know what I mean? It came down to those lows. Can I see a little bit? Just pinch that just a little bit more. I want to see if we are holding any previous highs there. Okay, there we go. Nice. So check that high right there. Don't I think you squeezed it up a little bit too much. That high right there from check out the high of hold on, right over. Okay, perfect. So the highs of November 20th, 2023. If you could check that one out. Yup, that wick high. Yup, I think you already have it marked out. Isn't it interesting how that low is that support right now that we have as well? And I want you to see where was the RSI at that low? On the low before. Sorry about that. The November 20, sorry, the high, November 23rd high, sorry. I think November 23rd, 2023, around there. Yeah. So now look at where we are now, and now look at where the RSI is at, right? Exactly. And did we lose that high? No. It's very interesting to me. Those are things that I look at. Mhm, 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 100%. Yeah, when it comes to mhm, and it's funny because a falling wedge could play out to those highs. So you're thinking good. I like that. Can I show you another chart that relates to that one a little bit that I have the same sentiment for? Check out ADBE, Adobe. Mhm. Same time frame should be good. All right, actually, we have to go a little bit more back. Check out monthly. This is a bigger one. Mhm. There we go. Now stretch that out as much as you can. Perfect. Now look at that. Look at where we are right now currently. And I want you to see exactly how we're acting on that 200 EMA versus how Microsoft was acting. Exactly. So imagine you having a leap on this stock versus having a leap on Microsoft right now. You see how the difference between the 200 EMA on the Microsoft looks a lot more stronger than it does on this one? Things like that are very important. Check out Google. It's another one to check out as well. So you can see GOOGL, either one. Hmm. Now check it out on the daily for me. See what's up on that one. There we go. Oh, look at that. Right? And look at that RSI. How does that RSI relate to the price now? It's a little off, right? Mm-hmm. Exactly. Exactly. So what's gonna happen if we take out that 20 EMA now, right? Mm-hmm. Exactly. Yes, sir. Yes. Now I want to ask you something about that cross. Is that cross strong? Yeah, we're just waiting there. We're just waiting there for the right buyer. Beautiful. Mm-hmm. Yeah. Mm-hmm. Yes, sir. It's been uppies ever since. Nice. Exactly, brother. Wonderful, man. Got a little RSI divergence. That low that we made there was not the same low as the previous low. That's good, man. That's exactly what you want to look for, you know? So this is how you do long term. Because I know you like to do leaps and stuff like that. And sometimes you want to pick up shares. This is a good way to add your TA on there so you can, pick up shares and leaps. Hmm. Yeah, man. Nice. Nice, Gamer J. I love that, man. Keep practicing, bro. Hone into your skills. You got this. 100%. Oh, yeah, no worries. So, got a couple stuff, you know what I mean? So we already run over the 5 to 20, the 15 to 200. We went over the 34. We're going to continue touching upon the RSI divergence just so that hones into you very well, right? And I also do want to teach you. I have other one more EMA pair if you want to, also learn that one. It's more of a scalper EMA set and something. Yeah, the 9 and the 20. Yeah, so if you ever used the 9 to the 20 before, you might know a little bit, right, about what that lesson might be about. So it'll be a quick one, but we'll just focus on those things. Okay, cool. So we'll just like, learn about it, something that you could add into your notebook, like another EMA set that you could try out. You feel me if you ever want to. Like me personally, bro, I trade all three. Like on SPY, I have the 5, the 20, the 15, the 200. And then on the right side on the chart, I don't know if you noticed, but I only have one EMA line, and that's the 34. And then on my futures, which is my other monitor, I have the 9 and the 20 that I use for ES and MNQ. Mm-hmm. 100%. Mm-hmm. 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 You would probably want to do micros because ES or NQ, they're gonna be expensive. You probably want to do micros. So let me see micros. I think micros is $50 intraday margin on certain applications. Oh damn, I'm trying to find it. Hold on, give me 1 second. There we go. Micro E-minis. Hmm. Yep. Hmm. Hmm. To be 100% honest with you, when it comes to futures contracts, I'm like, I have no experience holding overnight or swinging. I definitely have not really gotten into that. I'm more of a day trader when it comes to futures. So I can't really 100% give you the best answer. You know what I mean? In that situation. So it just really comes down to like, if you're holding a contract, right, there's no theta, so that's one thing you don't have to worry about, right? Theta is not a concern. The thing about it is the contract that you have, if you have enough margin in the account to sustain the swings, that's really what it comes down to, you know? So overnight, right, margin would be a lot more expensive than intraday margin. So if you're gonna hold overnight, right, you would have to, have enough money or enough cushion in the account for the overnight margin and whatever swing happens overnight that might go against your favor. So it's very easy to get liquidated. That's what it really comes down to. You know what I mean? Liquidation, you're too prone to it in those terms. Hmm. Yeah, micros always. Yeah, get those micros always, man. Mini is too expensive. Expensive. Yeah. Yep. Yep. As long as you have that, you're good. You want to. Hmm. Yeah. That's the thing. It is a multiplier, and it's funny because if it is a margin account, like if you're trading on margin, you could definitely go into the negative. You know what I mean? Yeah. I don't know. Hmm. That's not bad either. Yeah. Hmm. Yeah. Yeah, that's actually not a bad. That's beautiful. Hmm. Yeah, definitely keep an eye on stuff like that. Fear and greed, single digits, you want to buy, right? Always remember that, right? Oh yeah, let me send you the link actually. Oh, you got it, fire. Nice. My boy's locked in. Good. Yeah, we're in extreme fear. I'm not sure if it's if it's single digit though. Double digits probably, right? 23, exactly. Not too long ago, we were like in the teens, and then from the teens we went to 23. You know what I mean? Nothing crazy. But last time when the Trump dump happened, we were at like 6 or 4. That was amazing. Even me, bro. I want to pick up Qs. Like I want to actually buy Qs. I want to invest yeah, I want to invest in the QQQs. I want to get some shares. You know what I mean? Some VU and chill. You know how they say. It's just too expensive right now, right? I'm waiting for a nice crash. Yeah, I think Netflix is good too. Yes, be patient. Yeah, it's hovering over that little gap and it's trying to reject. Oh, there's a 1 day bearish FEG here. You should probably keep your eye on. Yeah, on Netflix. So we'll see what happens there. That was a 200 EMA rejection plus a bearish FEG rejection. Break down below 93.87 for a continuation down to the 20 EMA, 91.85. The 50 SMA is the gap fill. So let's see what happens. Let's Yeah, and I think that's a great opportunity to get back in. That's what I call a retest, right? Boom, retest, boom, back out, and yeah, you're looking great. I like that too, Gamer J. Nice, man. All right, broski. We're gonna leave it here then. Yeah, we're gonna lock in, man. So I wanted to ask you real quick, right? So is you want to do Fridays again? Because I know today was just like a reschedule. So you want to go back to Fridays? All right, perfect. No, you're good. It's okay. Don't worry. Okay, no, that's fine. Don't worry about it, brother. So I'm gonna get you down for. Well, I'm not gonna lie. We're probably gonna have to meet next week. I'm not gonna lie, just to catch up with my schedule. You okay with that? All right, perfect. So we're gonna meet. No, not this week. Next week. All right. So next week we're perfect. I love that. So we're gonna link up next week, Friday. It's gonna count as a 2 week thing, basically, because if we did let's pretend like we did Friday, right? If we did Friday, 2 weeks from then would be next week. So that's good. All right. All right, let's get it then, Gamer J, man. Sounds great. Appreciate you for tuning in, man. This is gonna be a nice little session that we're gonna have marked down, and I'll catch you tomorrow, hopefully in stream or next time for our session. Okay. All right, cool, brother. Don't worry about it then, man. Yeah, do what you gotta do, man. I'll see you, okay? Bye bye. Anytime. You too. Take care.